This is the FCTO Daily Forex News Report for the 30th of May 2013. Asian equities are broadly lower today following a 106.6 point fall in the Dow overnight. The Japanese yen and Swiss franc strengthened while the US dollar tracked lower. Recent encouraging US economic data has further raised speculation that the Fed will taper quantitative easing measures by the year end. Boston Fed President Rosengren stated in a speech that while it may be undesirable to abruptly stop purchases, he believed it makes sense to consider a modest reduction in the pace of asset purchases if we see a few months more of gradual improvement in labour markets and improvement in the overall growth rate of the economy. Former Fed Chairman Paul Volcker said a central bank's responsibility is to maintain a stable currency, and he noted that the Fed setting an inflation target implies a degree of accuracy in what we can actually achieve or should achieve. The Australian dollar was additionally lifted by strong housing data. Building approvals bounced 9.1% month-on-month in April, compared to expectation of 4.1% month-on-month and the prior month's 5.5% month-on-month fall. Swaps markets showed that traders are pricing around a 20% chance of the Reserve Bank of Australia rate cut in June, down from yesterday's 35% chance. In New Zealand, Reserve Bank of New Zealand Governor Graham Wheeler said that the central bank is prepared to scale up intervention to dampen some of the spikes in the exchange rate. It's reported that the central bank sold as much as 256 million New Zealand dollars in April, the largest number since May 2008. But such a number was viewed as being small by the markets, which questioned the bank's commitment in weakening the Kiwi. Data from New Zealand saw building permits rise 18.5% month-on-month in April. Overnight, the Bank of Canada left the policy rate unchanged at 1% in May. Policymakers maintained the stance that both growth and inflation were in line with projections and the economic recovery remained in progress, although slow. Same as the previous statement, the central bank viewed that it is appropriate to keep interest rates low, but affirmed that some modest withdrawal will likely be required. This has made the bank the only G7 central bank signalling a tightening stance on the next move. The concluding statement is the same as the April one, with the central bank stating that with continued slack in the Canadian economy, the muted outlook for inflation and the constructive evolution of imbalances in the household sector, the considerable monetary policy stimulus currently in place will likely remain appropriate for a period of time, after which some modest withdrawal will likely be required, consistent with achieving the 2% inflation target. This is the last meeting for Governor Mark Carney as he departs for the role of the Bank of England Governor from July. The incoming Bank of Canada Governor is Stephen Poloz, the current Export Development Head. Elsewhere, Swiss GDP grew much more than expected by 0.6% quarter-on-quarter in Q1. Eurozone confidence indicators will be the main feature in the European session. The US will release Q1 GDP revision, jobless claims and pending home sales, and Canada will release IPPI and RMPI. For all the news affecting the Forex market throughout the day and throughout the week, join us at forexcurrencytradingonline.co.uk. That's forexcurrencytradingonline.co.uk.